seen as stable of a price market as we've seen probably in a decade. Truthfully, It's like completely balanced, supply and demand. And that's because supply continues to fall and demand is naturally going to go up because you have an increasing population of people that want to move to Southern Utah. It's just increasing every day. More people want to move here. And that demand is pent up because we don't build enough, right? So supply only is changed if we build more homes or if people decide to sell.
People on Facebook say that we're building too much.
I know they are going to always say that, but cities grow. That's how they do, and they typically
cynical, by the way.
They typically grow. Yeah, exactly. They typically grow, and if they're not growing, they're dying. They don't just like, we're just gonna stay where we're at for a while. It doesn't work that way. So demand is getting pent up. People are getting used to where interest rates are because they've basically flatlined. They had a dip in December, which I think I called. If we go back to the other episodes, I called that directly. I think we're going to see a small pullback here at the end of springtime, kick off of summer, but we're probably going to get into this 7% range between high 6s and low 8s through the rest of the year.
Yeah.
I don't see any change going that way.
Yeah, there'd have to be something fairly catastrophic like COVID for
like a war or something, another crazy event type thing to happen. But with inflation continuing to rage, which is much, I think the Fed's talking today because as we're talking, it's April 4th. The Fed's going to talk again today. He's claimed that they're going to do a prime rate drop, but it's definitely not going to happen. I don't think it's going to happen today, but we'll see. And he seems hopeful that he's going to do it this year, but I don't think fundamentally that's going to change mortgage rates. We don't got Brandon here to give his thoughts on that, but this is my unsolicited. I'm not a banker. This is just my real estate perspective. I don't have a crystal ball, but I think we're going to see stability in mortgage rates. They're not going to change a whole lot in the next 12 months.
So with that being said, then what would you say to somebody who's like, we're just going to wait and see, what happens with interest rates. And, if they drop, we'll hop into the market.
I think I'll point them to, we saw a significant decrease in price from April of 22 down to essentially March of last year, March of 23, right? We saw a significant drop. Since then, prices have only gone up. So we pulled back and then turned around and started going back up again almost immediately. So if you're waiting for interest rates to drop, the problem is, so is everybody else. Prices are already going up. If you can't afford it, that's a separate conversation. But if you're waiting on something, so the reasons you're waiting are probably the same reasons why everybody else is waiting. The reason prices are going up isn't because demand is going down. It's because listings and the sales inventory is going down. Think about that. Less homes on the market,
supply and demand,
more buyers. You're waiting to a more buyer-friendly environment that isn't coming. If mortgage rates drop, what is that going to do to prices?
Well, everybody else that's waiting probably is going to jump back in.
Exactly. Which is going to cause multiple offers, having to pay over asking price again, right? A bunch of factors that fall into that to where you might not be able to get a house. Why wouldn't you just buy now and then refinance if the rates do drop, right? This is another thing that I'll show. On the macro, this is right here in front of you. We have the sales to original list price ratio is 98%, 98.85% over 3 months rolling. I'm sorry, this isn't the original. I wrote in here original. This is just the sales to list. So if you find a house that you like and it's listed at $500,000, you're gonna sellers are typically negotiating about 2 to 3%. Okay, the original list price ratio isn't far off that. I think it was like 97%, 96 or 97%. If you go back to Q1 of last year, it was like 92%. So Q1 of last year, buyers were negotiating all kinds because prices were coming down and sellers were coming down and getting out negotiated and getting less than they otherwise would have in this environment. So sellers aren't negotiating right now as much as I think they could be if buyers demanded it, because demand's there even though supply is going down. Buyers should be pushing hard to negotiate down on pricing. They got to be okay to lose a house here or there, but I think they should be a little bit more particular about the house that they get in this environment.
There's no reason to jump into something.
There's no reason to jump into something. And it still is a time to where if you're waiting for something to happen, the only things that could happen is you're going to pay more money, right? Because then you're going to be negotiating a year from now to reduce the price of what you would have bought it today. I just firmly believe that, right? So as far as sellers goes, it's still a seller's market. It's balanced. We're at like 4 months of inventory. But if you look at single family residences only, just single family residences only, that's where things start to really kind of look out. So if you look at this stat right here, this is only looking at single family homes. This isn't looking at townhomes, not condos, not manufactured homes, not mobile homes. Okay. You could see active inventory has dropped from a high back in September of 22, okay, October of 22, September of 22, to where we've dropped almost 500, just about 500 listings active on the market. So supply is falling. You can see that. And we could see the new listings that are hitting the market. If we compare it to quarter one, if you're looking at the screen, we had a similar jump in inventory, but a steep decline in March, where the new listings were almost identical to quarter one of last year. Almost identical.
Parade of homes has something to do with that as far as new listings go in
Yeah,
February.
it typically, like if you look all the way back to 21, you look at 22, you look at 23, we always see a jump. But like even looking at 22, we saw listing inventory climb and then just keep climbing. But it was climbing out of that COVID dip hole, right? So we have this big old gap from essentially end of quarter one in 2020. We had this massive shakeup. This is the earthquake that happens from end of quarter one 2020 through quarter one of 22, and finally normalcy happens in October of 22, and now we're getting into this stabilized market. Okay,
so on that same note, listen to this. Sold volume year over year, so Q1 of last year compared to this year.
Don't get lost in the stats, people.
Sold volume is up 23%.
Sold volume.
Average sale price is up 12%, and the percentage of list to sell is up 2%. So it was at 96%, just single family homes. Just single family homes. Q1 it was 96%, so you had 4% of negotiating room. Now you only have 2%.
Yeah. So what I'm trying to drive home here with buyers is that if you're a buyer, this tightening of the market, you're paying more for money for the houses. The interest rates are staying pretty stable. There's no reason to wait for a more desirable market, because it can really only get more difficult from here. Yeah. Because there's nothing to really disrupt the listing supply. The supply scenario of the economics, there's nothing to disrupt it. And the only thing that would disrupt it would be less people selling. We're not going to get this flood on the market of homes.
And if interest rate is a huge hang up for you, there's many examples of negotiating with the seller to make it so that the seller's net profit is what they need or what they want. And then also being able to buy down an interest rate to make your payment or your interest rate where you think it needs to be. So there's ways to, if you want to get into a home and it makes sense for you, it's different for everybody. But if you want to get into a home, there's ways to do it. Yeah,
I think this. If you're watching, hopefully you're watching online. If you're not watching and you're just listening, the price trends that we have in this graph is something to definitely take a look at. If you really want to see kind of a perspective as to like, hey, how have prices been going historically? This chart is from January of 2020. Okay, there's no reason to look back beyond that. We have to realize that like the new normal thing, they weren't even kidding. Like this was like a legitimate thing. Yeah. This is the new normal for now, barring some other massive event. But we're gonna stay positive from the perspective of, if all things being equal, we continue down this road. You look at the long tail of history. The prices didn't have this steep, like angled hyperbolic jump, right? This is a pretty stable growth since January of 2020, right? And the fall, I'm going back to this, the fall was from March 22 on the average down to June of 23 was the bottom. Since June of 23, we've ping-ponged up the market. And in some cases, we've jumped up in the market. So in February, our average price sale was $720,000 in a single month. Okay, there's some outliers. We get some big listings that hit the market, the Parade of Homes. We tend to get some peaks in February. But the median average is still climbing across the board. The median has had basically a no change since 22. We've just ping-ponged up and down with really no change on the median. Okay, so we're not seeing massive upward pressure on pricing, but look at the angle of the active list price. Sellers are negotiating less and they're asking for more. There's a big jump here on the average list price. And if you look back in 2020, there's this big angle in 21 where listings, the listing market are asking for more. They started getting more. And then when the market shifted, the average list price came down. But there's a steady crawl in the sold prices, right? The demand is still going to dictate what real value is. So even if the sellers are asking for a bunch, they're going to adjust because they want to move the property in a reasonable amount of time. So what I'm saying to this, in 23, what they were asking for is what you're buying today in quarter one. Quarter one of 23, they were asking these prices, getting less. Now they're asking for more, but they're getting the prices that they were asking for a year ago.
Yeah,
we're marching forward, people. We're marching forward.